All right. Hello, everyone, or absolutely no one, because this may never be launched. I basically am creating these in an effort to keep myself accountable this time around. And what I mean by this time around is I started a Tastytrade account back in 2018, and I think I had $6,000 in it, and I was doing pretty well through 2018 into 2019, making some gains, making some mistakes, nothing one way or the other. It was a learning curve experiment, I guess is the best way to put it, until 2020 happened. And when 2020 happened, let's just say I did not have enough experience. I definitely did not have any experience with negative markets, so I absolutely blew up the account. In fact, I blew it up to the point where I was down to about $240. I closed out my Tastytrade app one day and had not touched it until about 2 weeks ago. And 2 weeks ago, I just happened to open it up because I wanted to see what the balance was that I had in there and see if I could do something with it. So I placed one trade this year so far. I think it was a strangle I did on Nvidia, and it was doing pretty well. Started to move against me, and I closed it for this $84 profit right here, and decided that I was going to put some real money into this account and try it again and see what happens. So this is an experiment and a plan for me to try out some different trading strategies and try not to gamble away this money, but basically try and figure out what works, what doesn't work, have a plan moving into trades, write my own set of rules that'll be roughly based on things that I have read and learned in the past. And yeah, so I might put this out there for other people to follow along with me, but mostly it's for my own good. If I can go back and see what I was doing and hear what my reasons were for making certain decisions at certain times, I will either solidify that those decisions were good or realize that those decisions were bad. But anyways, yeah, here we go. So it is currently December 9th in 2024, and got the SPY open here just to take a peek. We are basically having a bit of a down day, which is a great time to sell puts or try to get into the market for a little lower price for either covered calls or poor man's covered calls, things like that. Want to get in at a better price. So use the market timing as well as the strategies to hopefully get the job done. Now, seeing how I only have $10,000 in this account, $20,000 in stock buying power, I'm going to try not to use too much of the margin because, well, I do not want to blow this up again. I may dabble in it here or there, but for the most part, I'm probably going to try and avoid using the margin. If I do use margin, I probably don't want to go over 50% of margin. I do have other money and savings and other trading accounts that I can cover my mistakes and losses, but I'm trying to keep this as an isolated experiment. So, what can I do with $10,000 in this account? If I want to do covered calls, that doesn't leave me a whole lot of options. No pun intended. So, $10,000 uh, divided by, let's say, you know, four different positions. If I'm doing cover calls, leaves me with roughly $2,500. I can account for in any one position, which four is definitely consolidating. May not be enough diversity, but going to try and not do too much in one sector. And the big problem is I can only shoot for uh, underlyings that are in the $25 range, give or take some. So that being said, I have gone through and have a short list of things that I would like to own. I do own some in other accounts, but these are things that I want to. I would be happy to own. So basically, Intel is one. They have been taking quite the beating lately. You can see poor earnings report here, and been terrible. But this, I honestly think we're at about the bottom. If I was going to gamble on a position in this account, I'm considering taking a stab at Intel. We're at the bottom of the Bollinger Bands. We're on a down day, and not saying I want to do it yet, but I want to look at what could possibly be happening here. So if I was to approach this, how would I go about it? Look at the trades, seeing how I wouldn't mind owning it. I wouldn't mind getting into it quickly. Can look at this Friday's uh, expirations and see what's going on. Not a whole lot of premium to be had here. Basically, pretty much at the money. We could get a $29 credit, which reduces the buying power, or excuse me, reduces the cost down to just over $20. Again, it's a little bit of a just a little bit of a gain, but getting into something that I think is at a turning point could be worth selling some covered calls on and gaining a little premium as we go. I don't see it going down a whole lot farther. And just if I get into this, I would definitely want to monitor it closely. So if I did something like this, I would want to get $29 here. Then let's see. Let's look at the curve on that. All right, so that brings break even down to roughly $20.20. Can it go lower? Sure it can. Can it go higher? Sure it can. But what is the, let's go back to the table. What is the standard deviation on this? I mean, we're not talking about a lot. We're talking about $20 is the low end of the one standard deviation, 22 is the high end of the one standard deviation. I have some high hopes. If I got this and got into it for Friday, I would probably look to see what, and again, I need to decide if I want to do weeklies, monthlies. How do I want to approach this? It's going to be, um, a work in progress for the most part. There are no concrete rules yet. There's some basic ideas, following good practices, but it's going to be a work in progress, and I'm going to try and slowly document these rules for myself based on what does work and doesn't work. So you can learn with me, or you can watch me fail and laugh. That's a good time too. Either way, this is for me, not so much for you, but and like I said, it may not even make it out into the public. We'll see what happens. So looking at, say, next Friday's, the monthly expiration, let's say I did get filled at the roughly 20 to 25, 2050 number here. I would probably look at selling a put pretty much just above the money at the money for the following week, $69. That would have given me a total of about $90 collected on a $2,000, $2,100 position. That's not too bad. What would that come out to be? And now this number will change by the end of the week when we're in a position early next week. We know that, but just roughly looking at it, if we were to go out 1 week. So let's say 0.21 plus 0.69 is 90 cents divided by, what did we say? Divided by 20.2 roughly cost. That'd be a 4.5% gain in pretty much 2 weeks. So that's not terrible at all. So, all right, like I said, I'm not sure I want to do that yet, but what I have over here is a short list of stocks or underlyings I'm considering. At this point in time for this experiment, I'm really only looking at these top five here because the price range is within the realm of what I can do, $20 up to $30. Mara, that's kind of, the Bitcoin play. I'm not really sure here real quick. Let me pop open my phone and see what Bitcoin is doing today, hovering just over 98,000. I've got a little Binance account where I've had some money invested in crypto for the last few years or so. Finally, just about getting even, making a little money on that. It's a long recovery on that one. But anyway, so Mara, that would be a Bitcoin play. So these are both tech, obviously. Carnival Cruise Lines, that is travel. And what I'm going to be looking at here is also trying to get in on basically companies that I believe are pretty solid fundamentally. Intel might be the questionable gamble on that, but at the same time, I've already explained my thought process there a little bit. Mara would be, that's definitely tech, Bitcoin, finance, however you want to look at it. It's a lot of touches a lot of bases on that one. Travel, Pfizer's pharmaceuticals, and for the most part, I've always been interested in Pfizer, and for the most part, they have what do they call it? Their big investor come in and I forgot the term they use, but a big shareholder comes in and they're going to push to improve the company. So that's never a bad idea in my book. And a lot of times these is it called a proxy fight? I can't remember. But anyways, sure they're going to want some seats on the board of directors and probably make some changes. So I mean, look at Pfizer has done nothing in a very long time. 10 years, went up and down. It's in a slump, not doing much. Again, it's one of those I don't think is going to go much longer, but I think with the activists, that's the word, the activists involved, it's going to hopefully take a turn for the better. So I like to look at the daily chart here for 1 year roughly. And that gives me an idea where I'm at in the Bollinger Bands. Pfizer's just about to cross over uh, the middle line here, the median. So that's not a terrible place to get involved. And, definitely jumping today. That may not be a good one to pull the trigger on today. Silver, that's always fun to play with, relatively stable. So um, just another consideration. Chewy, I'm an animal lover. We have rescued a number of dogs throughout the years, love them dearly. So Chewy's kind of always been a stock I've wanted to own, and I have yet to really take a position on. So again, looks like they're having a bit of a down day, approaching a lower Bollinger Band. So I would definitely consider getting involved with Chewy. So everything else is outside my price range for this account size, but I just want to keep things over there so I can take a quick peek as to what the SPY is doing, with the NASDAQ skewing, Russell, basically, yeah. So anyways, let's just take a peek here and just do a quick peek. Let's just look and see who's got the higher implied volatilities today and basically near the bottom of the Bollingers. Let's just use those two criteria right now. So Intel for sure, Mara not so much near the median there, but that's one, again, I think I wait for a little more of a pullback on the Bitcoin before I jumped into that. Carnival, they're just starting to come off of that top Bollinger Band, so I like that as see what happens here. Not ready to consider that one right now, maybe within the next few days or week or so. Also trying to not get all my positions in on the same day or maybe even the same week because, the market can do weird things all in a short period of time. So try not to buy all at once, try not to sell all at once, and try and be smarter with the money. So Pfizer, let's see. Pfizer is just coming off the bottom Bollinger. I may want to put in a position on that just for a little bit more of a pullback. Hopefully it pushes off of that and heads a little lower before it gets in, but that's the whole idea of, selling a cash secured put. Um, Silver, yeah, it's down there. Total possibility. Chewy is appealing for sure, but the lower implied volatility right now just means the premiums are going to suffer a little bit. So let's just take a peek and see what that's doing here for this week here. Um, let's see. So current price is 31.18. We want to get down here 63. That's actually not terrible, really. That's that's near 20%, right? So 0.63 divided by 31.17. Yeah, that's nearly 3% gain right there for entering. That's not terrible. What does the following week's sell premiums look like? Dollar or 81 cents? Going at the money or a little out of the money. That's not terrible. Um, I would like to see the implied volatility just a little higher on that. But all right, looking at what I see here, I may pull the trigger today. Most appealing, higher implied volatility in Intel and Pfizer. Pfizer's already kind of made a move up, so let's look at Intel. What do you think? Let's take a position in Intel today. Let's take a look here, see where we're at here. Okay, so the second two deviations, standard deviations to the bottom is 2022 right now, which is that number which we were kind of talking about doing. Just needs a little dip down. Will we get it? Yes, no, but not a lot of premium to be had if we don't get it, but it's free money if we don't get it, right? So let's just take a peek here. Well, 30 cents. I think it's gone up a little bit since we looked at it. So what is this? Mid price is 30 cents. We would be selling. Let's just see here. Options, shorts, puts, go. And that's the one it would have suggested anyway. So collect a 30% premium. So $30. After fees, get about 29. And let's see what we got here. Okay, so max profit of $30, max loss of 20,000, or excuse me, $2,020. Buying power affected is just going to be $380. So $30 doesn't sound like a lot, but this is just an effort to get into the stock and start selling, collecting more premium on this stock on something that I think is going to be moving up over time. So let's just send it off at 30 cents and see what happens. And all right, so I don't know if that'll get filled or not, but we'll take a peek. All right, so Mara implied volatility is a little less, coming down on that middle number average there. Let's see, Carnival's at the top. Pfizer's already moved up today. Silver, oh, made a jump today actually from the median to the top end of the two standard deviations. So that is one where if we had the position, let's say we got in here on Friday, this would be a great day to turn around and sell the covered calls on because you're already pushing the top, you would be getting a better premium. But we're not in that one, so we'll keep an eye on it. And Chewy is again the lower implied volatility, and that's also pushing the top of our buying power number there. So let's just take a peek at this just to see what it does. Again, I try not to get in to multiples in one day. But I just want to take a peek one more time here. The premium I would take on that would be 64 cents. Max loss of $3,035. max profit of 35. In all honesty, this is a better looking number than what we just did, but definitely a lot higher buying power, uh, effectiveness, efficiency, buying power, effect. Yeah, effect. I don't know exactly what it stands for, but that's the way I'm seeing it. So, anyways, yeah, those are my thoughts for today, December 9th, 2024, and here for reference for me later. I'd like to see if this thing gets filled. Or is it? Is it filled? Is it not filled? Da, da, da. Let's see. Oh, apparently I am filled because I have an open position. So let's see. Analysis. Where are we at? Okay, so we are in the trade and we make the full $30 if the stock price does not close below $20.50. And we can get all the way down here to $20.20 before we would start losing money. But we would gain those 100 shares and start selling covered calls to gain premium on that. So, anyways, yeah, if this ever gets out to the real world, I hope you enjoyed it, and if not, I'm sitting here talking to myself like a babbling fool, but I'll have reference to look back on to understand what I did and why I did it. So if you are watching, thank you, and have a great day.